Q3 earnings season is in full swing, and we have updates from Meta, Alphabet, and Amazon. Welcome to The Refresh, your weekly download on what went down in advertising. If you like to stay up with ad industry and tech news but are short on time, this is for you. This week we'll do a quick overview of where Q3 earnings landed for each of these three, all of whom reported record revenue growth but had different reactions from Wall Street, and then we'll zoom out to look at why this was and bigger picture implications at the end. So let's get into it. Starting things off with Meta, whose Q3 revenue came in at $51.2 billion, a 26% increase year over year. Ad sales came in at just over $50 billion, exceeding Wall Street's expectations of $48.5 billion. Average cost per ad increased 10%, a trend that has persisted from earnings report to earnings report, and ad impressions across their family of apps increased 14% year over year. Zuck told investors that AI-powered recommendation systems have increased time on Facebook by 5%, Threads by 10%, and video viewing on Instagram by over 30%. Despite reporting record revenues, Wall Street is starting to think that Meta is writing checks its body can't cash, at least not anytime soon. Stocks fell by more than 7% upon hearing Meta state that they plan to aggressively ramp up capital expenditures to stay competitive in the AI race. More on that in a minute, but let's move over to Alphabet, who saw revenues increase 16% to $102.3 billion for the quarter. And this was largely thanks to its cloud services and digital advertising businesses. Their Google search business reported about $56.6 billion in revenue for the quarter, a nearly 15% increase year over year, while YouTube saw $10.3 billion for the quarter, up 10% year over year. CEO Sundar Pichai highlighted the strength of AI mode in their search business, which now has 75 million daily active users. I did find it a little interesting that he said search and its AI experiences are built to highlight the web, sending billions of clicks to sites every day. I think there's some data that suggests otherwise. Finally, wrapping up the top line with Amazon, whose net sales increased 13% year over year to $180.2 billion for the quarter. Amazon's cloud business, AWS, saw a 20% increase to $33 billion for the quarter, with CEO Andy Jassy remarking that they hadn't seen this kind of growth since 2022. As far as advertising goes, that business generated $17.7 billion for the quarter, a 24% increase year over year. Here, Amazon took a moment to highlight the major moves they've been making to become a serious contender in the DSP space, including recent partnerships with Netflix and Spotify and their plans for agentic commerce. Zooming out, earnings reports from big tech companies continue to be a pulse check on how AI development is progressing. And Wall Street is increasingly looking for proof that the mind-blowing amounts of cash that are being invested in AI development are actually paying off. Google and Amazon both provided specific examples of how their AI was being directly and indirectly applied in ways that could be monetized. They also have highly diversified revenue streams, with cloud services proving to be a heavyweight. Meta's success relies predominantly on their advertising business. And so far, all Mark Zuckerberg has been able to provide to Wall Street are vague allusions to future plans for new products that will produce new content formats, as well as smarter AI models that will improve app and advertising recommendations. I'm an AI optimist, but I'm also a realist, and I think most of us, including Wall Street, are starting to ask, where is this going? And will it actually be transformational, or will we all just be forced to live within big tech's fever dream? That's it for this week. Thanks for joining us for The Refresh, and we'll catch you next week.